So let's start in bond land, which was pretty quiet, all things considered. Chopped around, as we can see here on the 5-minute and the hourly, still holding around that 4% figure as recession fears continue to sort of play out in the bond market, but not according to the Biden administration, who are doubling down, saying that the economy is strong as hell. I don't think so, Mr. President. UK continues to weaken on the back of that folding of the budget measures. Still got a lot of work to do. Inflation numbers last night came out, and the inflation comes out tonight. Sorry, hasn't come out. It's coming out tonight. So that'll be interesting to see where bonds trade from there. Bigger moves over in commodity markets, with oil getting dumped, gold going nowhere, wheat crashing, iron ore weaker, coal weaker, natural gas getting smashed, and copper also getting smashed. Now that's the recessionary indicator, right? It's one of the largest used metals, industrial metals around, used in a lot of things, particularly in batteries these days. And so the commodity index also getting smashed. Now that's going to have an effect on the commodity currencies naturally, and also having an effect on Australian stocks. So US stocks having that little Christmas rally. Now that's only going to go as far as I guess the Fed will let it in terms of interest rate rises. But I think there's only one Fed meeting between now and Christmas. Let me just double check that. I think there's only September. Oh no, November, December. December, the big one. Okay, so we've got two more before Christmas. And the big one will be mid-December. So that might put the kibosh on this Christmas rally, but certainly I would expect the market to sort of track this way until unless there's an event otherwise. Meanwhile, Australian stocks won't do as well. They've got that push-pull effect, so the push of the US market and the pull of the commodity market. So expect a lot of chop on the Aussie stock market, and FTSE trying to work out what it wants to do as well. Don't really see much of an opportunity there unless you want to sort of jump in on the shorter time frames on these ones. You can get that sort of cycles happening on the shorter time frames and participate in that sort of angle. In terms of currencies, I said the commodity currencies will underperform, and we're seeing, price tracking higher on the euro, nowhere on the pound really, weaker on the yen, a little stronger on the Swissy, going nowhere on the CAD, nowhere on, really on the Aussie, and surprisingly Kiwi doing okay. After they had a big jump in inflation, you'd expect their rates to maybe go a bit higher, and US dollar, a pretty quiet session, but tracking lower as we previously discussed. So look for the euro. There's a bit of resistance here. If you can get through that, then you'd be looking at parity pretty quickly, which is around here. And hard to trade the yen out here. It's so over extended, pretty tricky to trade it out there. And maybe looking at the pound to track lower, but I don't want to trade that because that's selling pounds and buying US, and I don't think buying US is the right idea right now. So yeah, and I can't really sort of get on board of buying the Aussie either, considering where the commodity markets are trading. So all a bit tricky, but we all wait for the UK inflation and see where we go. Thanks guys.